Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. With the Australian dollar bulls are not backing down after last night's down test, again rebounds off the key support level of 71.4060. And from the rebound, did get to a high late in New York at 72.01 before backing away. At present, the relationship between China and the US still remains on edge, as the markets hold to a wait-and-see mode after reports last week revealed that the US administration was on standby to inflict additional levies of $200 billion worth of Chinese goods. News sources reported that China is looking to retaliate, but let's see what comes out as the talks are still continuing. From a technical point, though, I still see the market breaking down. We are still trending from the ADX, and also the RSI is still in marriage with the MACD, so therefore another challenge of 71.40 should not be ruled out. A break beneath there would give further to the downside and bring in a target of the 69-cent region. I'm still a seller in rallies up towards 72.35 to 72.65. A very interesting choppy session for the euro, with the dollar index, which measures the greenback strength against a trade-weighted basket of 6 major currencies, was slightly subdued as concerns over the threat of a ramp-up in the US-China trade wars. From this morning, the market is currently waiting confirmation on whether Trump will impose levies of $200 billion more on Chinese imports. As of tonight, the broader metal markets also traded mixed. The world's two largest economies have slapped tariffs around $50 billion on each other's goods in the tit-for-tat war, and Trump is considering imposing, as I mentioned, around $200 billion on Chinese goods. He came out to say, "We've done very well in the negotiations with China, but we are not prepared to make a deal that they like to make." From a trading point, I still look towards the region of 116.75 to 117.55 to 65 as a sell zone. It is assessed that the market should eventually take a challenge back to the downside, and if we do get a break to the euro, then we are looking for a move towards the region of 115.65, with the target still at 114.15. As I feared, the dollar yen was not able to take on the challenge of 111.80, and from the technical point, still holds to a bearish case. With a low so far printed this morning of 110.37, I am looking towards the region of 110.05. Now a break beneath there would give further scope towards the region of 109.45. Resistance at the moment is seen at 110.80. The pound isn't going pretty much anywhere since it's erratic day from the challenge of the downside and the upside. From the technical pattern, though, it still looks like it's breaking down. And while we maintain under the level of 129.80 to 130.40, I still hold the view to the lows of 126.60. The gold over the last 3 days is attempting to recover, but I'm still a little bit skeptical of the move, and at the moment still neutral. I still feel that we could see a down test later in the month when we do have the Fed rate decision that's coming up on the 25th and 26th of September, with the 25 basis point knocked in. We could see another one not too far away in December. So let's see how gold plays out. On the day, though, the range sees at 95.203. Well, the confirmation from the outside range day has continued on and stabs at the $67 trigger level. Not completely breaking this level, but from a technical point, it is married up with the MACD and the RSI. I do expect to see further weakness, and a break and a close under 67 will initiate the move towards the 65.80 and then $62 a barrel target. Resistance at this stage is the 69.35.55. So that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.